Good morning, everybody. It's Christian from Serene Education with the 4 Majors and Notes update for the 17th of September 2012. Hi guys, hope you had a fantastic weekend with family and friends, and hope you had a fantastic week last week. You should all be in profit. There was a lot of movement last week, and if you're just trading what the charts were telling you, and if you're using the CTC strategy template, you should be well in profit. So well done to all of you that actually made any profit last week using the strategy template, and all of you that just follow my news, my chart analysis, and well done again to those who are doing exactly that. So just have a quick look at the weekly chart of the euro against US dollar to start with. New week, let's have a look what's been happening today on the Asian session. Well, bank holiday for Japan. Australia, we had new vehicle sales. This news not really all that relevant on the Asian session. This morning we have, for the European session, we have the current account details for Europe. This afternoon we have the Empire State Manufacturing Index. Other than that, not much other news. So what are the charts showing us? What I want you to do is take, you can see before, way back in 29 going through to 2010, we had a high point and a low point, and then we had a pullback to the upside. Now if you use the Fib retracement of it, you might have been able to look at potential profit targets along the way to the upside, and I'd like to do the same for this particular time frame. So you can have an all-time high here. I just want to take a Fib retracement from the high in 2011, which was I think at the end of April, and I'll take it to the low which we had in August of this year. I just want to project a Fib retracement area. You can see where price is trading right now and relative to the major bounce. Okay, we've had a correction since July, and that correction's taken us to these points. You can see quite clearly here. 2 weeks ago we had a nice bullish engulfing candle take us well above this prior support and resistance Fib retracement area here in the shape of the 23.6, and since then we've actually climbed higher right up towards 38.2, and we are now consolidating under the 38.2, which coincides with this current correlation area here on our weekly time frame. So in order for us to get any further movement to the upside, we obviously genuinely need to be trading above that 38.2, which is in the shape of the 3150 here. So if we look at our daily charts, if you look at the overall trend, apologies, just got to look at the trend, you can see the major trend now. If I take all high to the price swing over here, you can quite clearly see that we are trading quite relative to that major downtrend. If you're taking the one before that, you can see that the stronger touches 1, 2, and 3, you can see we had that major break over here with this consolidation. Indecision candle followed by the decision, and that decision has taken us up to another prior support and resistance. We are now at this current consolidation area here at the 38.2 Fib retracement area, plus we also have that major downtrend that's coming into play now at this 131.50 mark. So we're going to see a lot of consolidation here. Likelihood, we've had a lot of movement over the past couple of weeks, and we could see potentially for price now to consolidate. So if we move that into our daily time frame, there you have it. You can see that 38.2 area here, a lot of consolidation here, once, twice, a number of occasions through here, and then yet again at the 131.50. So we're going into an area where we could potentially see a lot of consolidation area taking place. The good thing is, the long term, we are very much, it seems as though we are very much in a positive trend. A lot of movement to the upside. How long will this movement likely take? A lot of people have been saying out there, listen, yeah, great, this is all fantastic short term, but the long term reality is that Europe is still in a bit of turmoil. So that all seem to think this might really be a knee-jerk reaction. We've had them in the past, very noticeable one year in October through to November of last year, a nice knee-jerk reaction before the actual reality set in, and we saw a major move to the downside. So we don't want to be triggered into any of that. So ideally, if this is going to continue to materialize to the upside, we want to see a break and close above this 38.2 here, which is at the 31.50 mark. Get above that, above this consolidated range here, because you can see there's quite a lot of consolidation now in this area. And then we should be targeting the 130.50, 13,500 mark, and then follow that by the 1382 or 8,500 mark. So got to get above this 13,150 as soon as possible in order for us to see any further sentiment push to the upside. Otherwise we could see consolidation here, and we just got to be very aware of that intraday. Here on my hourly, you can quite clearly see we've had a lot of consolidation after that move to the upside, faltering at 4 o'clock on Friday afternoon. and since then it's pulling back. You can see a lot of consolidation now. Yeah, price is pretty much consolidating in this area between the 131.100 and the 131.50 mark. So consolidative range, as you see, a lot of indecision candles, a lot of dojis and spinning tops, not really doing anything. The only good thing about it is it's still hugging the upper side of this band after this move to the upside here. So you can see this push to the upside, and we can see prices not consolidating above the 20 period moving average. Still above all the moving averages, and our CTC on our hourly is still looking positive. However, we still need to see that bullish engulfing candle. The last thing that could happen over here is we could see a bearish engulfing candle, and we could see price dropping towards these moving averages to the downside. So if anything, if you take your hourly trend line, you can see quite clearly we have seen higher swings, and that higher swing, you can see that the trend line would take us roughly around this prior consolidation area here if we had a pullback towards the 130.05 mark, which will take us back to the 50 period moving average before that trend line comes into play. And if you look at the consolidation and before we saw the breakout, we could potentially look at this is our breakout area to the upside. So noticeably the 23.6 here at 1300 take us back to that psychological level, support and resistance level here at 1300, which is a major support and resistance level for this pair, as our first target to the downside if we do get a bearish engulfing candle and that breaks below this consolidative range intraday. So just be aware of that. We might see consolidation for the next couple of days. We have to see a bullish engulfing candle to actually cancel this consolidative range. Next on to the sterling, good old GDP against US dollar, and where are we trading relative? Well, you can see price has moved into this price support and resistance level here, the highs we had in April, May on our weekly chart, and you can see prices on last week pretty much buying into that, however closing lower as we went into the close of play on Friday night on the US session. On the Asian session, because it was bank holiday in Japan, not much movement up there, not much momentum, and you can see that the trading range is quite small, very indecisive at that. Doji at the moment, but you can see that the moving averages and our CTC is still very much blue across the board. To see any further movement to the upside, we do need to see price closing above 16,2500 in order to see any further progression to the upside. If that was to occur, then we could be targeting the 16,500 prior consolidation here over a consecutive through May through August, and then we could look at potentially heading up towards this previous support and resistance level here, just short of the 16,7500 mark. Two possible targets if and when we break above the first one that really in the way now, which is this one here at the 16,2500 mark. So got to get above 16,2500 to see any further progression to those other two major targets, the upside being 16,500 and 16,720, I think it is. Here's our chart on our daily time frame. Quite clearly see as we headed into this, a lot of movement to the upside. Everything's positive, everything's looking fantastic to the upside. Moving average below us. You can see our 50 period moving average now is crossing our 200 period moving average, which is long-term positive sign. CTC is, and the histograms and everything are looking fantastic for further upside movement. The only thing we need to get above now is the 16,2500 mark. Get above the 16,2500 and we can kick on towards those other two targets I mentioned on our weekly time frame. Look at the hourly time frame for this pair. You can see that price is not consolidating. Very tiny range, trading range, coming at a price support and resistance level here, the shape of the 16,200. If you want to see where price is likely to pull back, if we do get a bearish engulfing candle here, you can take the start of this uptrend over here. You can see this consolidative range, and then we had the buying sentiment coming through. Let's take the low of that to the high that we are seeing at the moment now, and you can see the fib retracement levels being plotted. So see 23.6 acting as a support as we speak here at the 20 period moving average. A lot of indecision candles, very small trading ranges, not really giving a lot away, however still trading below, and you can see these lower swings are still very consecutive. Yep, break and close below the 23.6 on an hourly chart. We should be targeting the 38.2 here at 1619, which will bring us back towards this 50 period moving average. Break below that, take us towards the 50% line, the 61.8, and most importantly the last one here would be the 78.6 mark, which I just put in here would take us back to this prior consolidated range before we saw the breakout. So if anything, if we see a major pullback, it could take us back to this previous support and resistance level here in the shape of the 78.6 here, which happened to be our prior breakout. Consolidation in the breakout to the upside here at 1612. So intraday traders, just be aware of it. Plot these areas here to see if you can see any potential opportunities to take profits on the pullback if we get a nice bearish engulfing candle soon. US dollar Swiss franc, Here's our weekly chart. You can see a lot of movement to the downside in as many months, and you can see after this is after we hit it into the 1000 mark, which constitutes here with the institution moving average. And if I just pull back on my weekly chart, you can quite clearly see how we had prior support over a number of months over here in 2009, further resistance through parts of 2010, and that would have been constituted a great support and resistance level target near term. And sure enough, as we got into it, we saw a lot of selling, and sure enough, we've been moving to the downside ever since. CTC has now gone, this is the second consecutive week where we've seen the CTC going red on our weekly time frames, and if everything, you can see the 20 period, the 50 period moving average on a week also been broken. A lot of sentiment driving now to the downside, these candles getting bigger and very little wick on either side. So where we're likely to go to, you do a fib retracement from the August low to the current high here, just below the 1000. You can see quite clearly the 23.6 area. We had constituted a major support and resistance level in the past. A number of weeks resistance here, further through there, a lot of resistance through here, and you can see where price on week last week taking us lower than this area and then consolidating. You can see we're consolidating at the underside of this, which happens to be the 50 period moving average as well. So what we need to see now is the 930 now becoming a major resistance level for price, or resisting price on the pullback, and if once it does that, it'll confirm a pullback before we see a continuation in the direction of the trend. You can see our intermediate trend is negative, moving lower, so that should show up on our daily charts. So here we go, here's my daily chart. You can see I've got my fib retracement areas at 23.6 where my current horizontal line is placed. There we go, I'll take it off so you guys can see it a lot easier. That's a 23.6 area. We have the 930, we've broken through it now, and we're consolidating on the underside. As long as that remains, if price remains below this 930 now, then we should be looking for further progression to the downside, and then we should be targeting 38.2 down here at 88500. So you can see the intermediate trend now very much to the downside, swing lows depicting downside trend. We're trading below all the moving averages, and most importantly, our CTC has gone red across the board. We have red arrow, red candle, and histogram on our side is red, so we should be looking for nothing more than shorting opportunities. The little intermediate trend you can see quite clearly here. If you take these two to all these three, you can see that's also just been broken. Friday's candle trading lower has broken through that, so now we have a major break to the downside. So as it stands now, we should be targeting the 8850 is potential long-term target for this pair as we move to the downside. We could take these little consolidation areas over here. There's one over here, for example, little support area here at 905, just before the 905. Another one down here at 980, the 895 before we head to the 8850 mark. So we have three particular targets to the downside. All we need to see now is for price to consolidate under 930, find resistance here, and then push on to the down. Last pair of the day is US dollar Japanese yen. Let's have a look at this pair. Now this is the weekly chart. You can see a lot of consolidation just recently after this major move to the upside through February, the major pullback since February right through to June, and since then it's just been consolidating, just been trading sideways, not really giving us anything. Pretty much between the 80 and the 78, major consolidation area. This 78 and the 80 constitutes to a major price support and resistance level. If I put a horizontal line, you can quite clearly see here at 78 a lot of resistance through most of the second part of 2011, through August, September, October, November, December, January. A lot of resistance before we saw the breakout in February. And above that we had the 80, which also constituted to a long-term support and resistance level before August. A lot of support before we saw the breakout. So trading is consolidated range. Last week very positive after a lot of indecision. The start of this week though is still very indecisive. So back above the 78 now, we could see price just moving within this range. Just be aware that the 20 is now potentially crossing over the 50% line, which is a 50 period moving average, which is not great, and you can see that we're still making lower swings, and lower swings depicts downside movement. Okay, so we've got to be very aware of it. Look at the CTC overall, still very much red across the board. We've been red since 2008, guys. A lot of negativity on this pair. The US dollar has taken a huge bashing against the yen, and we're still trading in a consolidated range. So last week's bullishness, well, last week's Friday's candle, the rest of the week was quite negative. You can see quite clearly a breaking below 78, but this candle moving back up against and higher than the 78, which happens to be our major support and resistance level on our daily time frame. If I just put that in so you guys can see it, very indecisive at the moment because of this to and throwing, very much backwards and forwards. bullish upside movement. This is only because of the Fed announcement last week, with the likelihood of QE3 going ahead, quantitative easing, and this caused this major pump to the upside, positiveness. However, it needs to remain above 78 now to see us pushing higher. You can see it's trading against the 20-period moving average. The institution is still above price, and the CTC still remains negative. So even though we had this massive move on Friday, it doesn't constitute that we're looking at positivity in the market. You can still see here the intermediate trend is still negative. We had a high, we got a lower swing, and you can see prices trading potentially at the underside of that now. So we need to see the US dollar really pushing on higher to actually break this trend, and then we could potentially be looking at the upside here at the 80 as our long-term target, because this is where we had previous support and resistance level on a major long-term time frame. So got to remain above 78 to see any further extensions to the upside. It could potentially still break lower again, because you can see that sentiment is not generally really behind this. You would have to wait for everything to really push higher, get way above all this consolidation here to see any long-term bullish sentiment for this pair. For this to remain negative, we need to see price trading below the 78. So consolidating above 78, trying to this momentum pushing higher and trading above 78 looks potentially as a support candle or positiveness. But if it gets below 78 again, then we should be looking for long-term negativity towards that 76 mark, which happens to be our major support and resistance level, long and negative long-term target to the downside. A lot of consolidation here at 76 in the previous months leading up to this. So you can see quite clearly here, Friday's bounce higher, trading above 78. So as long as it remains above 78, then we could see price potentially bouncing to the upside. Get below 78 again, then we should be looking for long-term negativity to remain in play. That's it, guys. That's it for today. Kept it short and sweet. A lot of news out there at the moment, so we could see, particularly after last week's movements on the four majors in particular, we could see a bit of profit taking, consolidation. So heads up, look for any bullish candles, bearish candles that are going to inflect, or look at any news announcements for the remainder of this week that could really tie in with fundamental movement. Otherwise, just keep it simple, back it up with sound money management, be patient, bide your time, let the market tell you what's likely to occur. Look at candlesticks in particular. They'll tell you a hell of a lot on what sentiment's like out there on the market. You can read a lot into the psychological aspect of what's happening in the market just by looking at your candlesticks, and just trade it simple. Keep it simple. The ones who try and make it hard or difficult are the ones that are making losses again and again and again. Other than that, have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, trade serenely.